Hey, everybody, welcome to another episode of the Discovering Multifamily podcast. I'm your host, Anthony Scandariato with Red Knight Properties. And today we have a special guest here with us, Saurabh Shah, and he is the co-founder of InstaLend. He's got a lot of experience in real estate investing, transaction structuring, and asset management. But we're going to focus on his platform, InstaLend, which is a tech-enabled lender for real estate loans, multifamily loans. He does some mixed-use loans as well as residential, but it's a tech-enabled lender for real estate loans, providing fast, affordable, and convenient capital to real estate developers. And before he started InstaLend, he's had many different experiences in investment banking in New York and Mumbai, where he's helped raise growth capital from private equity and debt funds. And he is a graduate of NYU with a master's degree. So really excited to have him on the show and learn more about his journey in real estate and how he kind of got to co-founding InstaLend and what InstaLend does and how he's looking to disrupt the real estate market.
Awesome. Thank you, Anthony. It's been a pleasure to be on the show. Thank you for the warm introduction. InstaLend is your private lending partner for anything that is real estate investments across single family, multifamily, and mixed use properties nationwide. Our loans range from as little as 50,000 to 50 million. So we try and really work through the small balance loans to your multiple units, multifamily properties. We're asset based, so we really focus on working with appraisals. And primarily a no-doc lender. We can definitely jump more into some of the loan programs we offer, both on the short term, which is 12 month, and the longer term, which are the 30-year rental programs.
Yeah, so I guess first let's take a step back a little bit. Why did you decide to start InstaLend.com?
So I actually started off flipping while I was working in investment banking and real estate, private equity, and debt funds. And I sort of had this interaction with the asset class, which was tangible, something that I could touch and feel, put my money to work and see it appreciate as the market performed. And while I was doing that, I realized that as I wanted to scale my portfolio, there was definitely a need for external source of financing. And the avenues that were available to me were your conventional, the credit unions, the banks. But really, because I was working with investment properties, I really had to time the market to make sure that if I get under contract, I have those 30 days to get to closing, and I can find a lender who can work with me, working with my timelines. So, going through the underwriting process, going through how appraisals are worked with, most lenders work with AMCs. We did identify a few gaps in the space, and the motivation really was to bring in sort of an institutional color of capital, but specifically geared towards the real estate investment space. So I had the opportunity to marry that experience of mine from investing in real estate to then rolling out sort of a more institutional platform like InstaLend, through which we could enable other fellow investors to work through their portfolios.
Nice. So you mentioned you have conventional banks as well. So what's kind of like the differentiating factor, between the conventional and here, like how quickly, if you apply for a loan, how quickly do you get a decision with terms, and, how quickly is that funding process? I'm sure each program is different that you have and the time it takes, and I'm sure the rates are different too. So can you talk about that process a little bit?
Sure. So we've taken the advantage of technology when it comes to working through loan submissions. So if you go to the portal instalend.com, you'll see a section right at the top which says apply for a loan. It'll ask you for a few basic details, which is your contact information and property specific information. Once you fill that out, you should get, or rather we always get back to you the same day with the loan commitment. So you will have indicative loan terms from from the information that you sent our way. Once we have that, the next step would be to order the appraisal. We have empaneled local appraisers nationwide across every zip code. So the turnaround time for appraisals for us is not more than 10 to 14 days at best. Of course, depending on the workload of the appraisers, their availability, how far the subject property is, and a bunch of other variables. But we usually do a pretty good job bringing the appraisals back within 10 days. And once we have the reports back, we usually complete underwriting in 2 to 3 days, get title work completed and closing documents drawn up. So all in all, you could say between 2 to 3 weeks is what our closing timelines are. Most of our clients start off by requesting with a pre-approval. So that way, when they put the offer out there with their realtors or the seller's agent, they know that they are pre-approved with InstaLend, and we're pretty comfortable having a 30-day clock as the closing timeline on these contracts.
Excellent. Okay, great. So can you talk a little bit more about, obviously a lot of developers use, for the larger deals, they use maybe a real estate broker to find them the best financing source, or they have some direct, relationships with banks. I guess what would, why would someone check out the platform if they have some relationships and see what you have to offer? Are you really looking to kind of streamline the process, because you have to, as an operator, provide a bunch of documentation via email and follow-up questions and conference calls with the bank, and it could take a while in order for them to receive all the information they need to lend and eventually close. So it seems like it's pretty quick, the turnaround time for your company.
Yeah, sure. So we primarily have two programs. One is the short-term 12-month program, which we call as the bridge loan. We are a no-doc lender. So on that program, all we need is a signed, ratified contract, a rehab budget drawn up. We'll go ahead and order the appraisal, and we'll close in the name of your business entity. So we expect our investors to just have 3 pieces of documentation ready, which is the contract, the rehab budget, and your business entity documents. So if you're using an LLC, that would be your operating agreement, your EIN letter, certificate of good standing. So that's pretty straightforward, seamless. Very few reasons for things to get delayed there when you have such few requirements. Things change a little bit when you move on to the longer term program, which is the 30-year rental platform. In addition to what I just mentioned, the only other information we would need is a copy of your lease if the property is already rented. If the property is ready to be rented, we'll just ask you for a copy of the lease with a security deposit, just because we know that this is an asset-based loan, so we want to make sure that the property is income producing to pay off the mortgage. And we'd ask you for your last 3-month bank statements. We don't request for tax returns. We don't request for W-2s or pay stubs, none of that. We specifically keep our requirements limited to the asset class, which is real estate in this case.
Okay, and so if you're doing basically a no documentation loan on both, within both of those programs, how are your interest rates? Are they competitive with the market, and how does that fit in with your plan in terms of, is there points you got to pay up front and things like that? I'm just curious.
Sure, that's a great question. We take no fees upfront, so we're completely performance based. We won't waste your time if we're not looking to close a loan for you. We only collect points at closing. We have a standard 2 points in closing that we collect. In terms of the rates on the shorter term fix and flip or the fix to rent programs, our rates start at 7.5%. Of course, subject to your experience and your credit score, the rates may kind of change. And on the longer term 30-year rental loans, the rates start at 4%. We do look for a healthy property debt service ratio. The better the debt service, the lower the rate.
That makes sense. And you're basically nationwide. So I'm curious, how many properties have you lent on, and how long have you been around?
We've been around for a little close to 3.5 years. We are nationwide. Just to give you a sense on the velocity of deal flow that we're seeing is, I think on an average, we're closing about 45 loans each month in the last 3 months at least. So it's been pretty busy. We've tried to build a good performing book across both the short term as well as the longer term product, and across asset classes. So single families, multifamily, and mixed use.
And what's your mechanism of advertising your platform?
So the good thing for us is we've been completely organic. Most of our new business comes from referrals. So it's either one of our existing investors who would refer somebody else to us. We do work with a few brokers who send us clients, and it's been a good experience with them. So they like to stick with maybe one or two lenders, and they do a fair share of new deals that they send our way. But more or less, it's been word of mouth referrals. You won't really find a lot of advertisements out there or any marketing material out there for InstaLend, because we want to make sure we are lending to investors who've come through referrals. There's a better handle on performance. Yeah.
And so what's the most important thing to a lender? Is it more the experience or the financial backing, or a combination of both?
I would say it's a combination of both. If you're a first-time investor, the lender may expect you to work with a licensed GC, may expect you to have a higher down payment, just so that you have a higher participation in the deal performance. And as you scale up, as you start working with more deals, you have more deals under your belt. You're more or less on your own. So if you're doing the rehab yourself, or you're just working with a local contractor, that's fine. We do lend up to 90% on purchase, and we always finance 100% of your rehab budget, because we can lend up to 75% of the ARV. So all in all, it just becomes a good platform, really well equipped with leverage for investors to succeed.
Excellent. And do most of the investors, when they go into the bridge program, do they do the refinance with you?
That's what we've been seeing of late. A lot of our investors who come in from the bridge, right from acquisition to rehab, and if they decide to hold on to the properties, we take them out at the fag end by refinancing the fix and flip or the fixed to rent into the 30-year cash out fixed rate mortgage.
Got it. And
sorry. I mean, one of the reasons we're seeing that is because, we've seen the market perform very strongly. Values are holding up, or if not, at least they're going up. So most investors want to get a healthy cash out, and we go up to 75 LTV on just cash out, but we also do up to 80 LTV on rate and term.
On purchase?
Yeah, purchase as well as rate and term refinance.
Right. Okay, excellent. That's good. And obviously you're paying a little bit more in the rate than if you were to go to conventional, but the process is pretty crazy. Yeah.
Yeah, close in less than 30 days, get a loan commitment the same day. So we try to keep them moving.
Yeah. Have you seen a lot of newer investors go onto your platform and end up making a mistake and you have to take over the property? Obviously this seems like you're lending on a bunch of different asset classes, but let's just call it residential to start. Maybe some newer sponsors or new investors where they're not used to paying, at least on the bridge program, almost 8%, and something happens. Like, is your default rate pretty healthy, or what? How does that look like?
So touch wood for us, we've literally had a very, very low delinquency rate. And I think one good reason for that is because when you're looking at the shorter term fix and flip program, where the rates tend to be higher, starting out at 7.5%, because the funds are released through a draw mechanism, it always works in the interest of the property for the investor to first finish the work and then request the funds to be released through draws, which really incentivizes every stakeholder to make sure that the deal keeps performing.
Right. No, that makes sense. So very low delinquency rate. And what states are you seeing most of your loans being originated in?
We've started out, we're based out of New York. We started out with a lending book out of the East Coast. So we definitely have a bunch of activity in New York and in our backyard, New Jersey and the tri-state area. But we've also expanded to Midwest. So we have a strong presence in Illinois, in Ohio. We're also doing a bunch of deals, especially on the multifamily side in Arizona, Florida. We're also now expanding on the western side of the hemisphere.
Excellent. And what has been like the greatest lesson learned throughout your career in starting your company?
Well, it's really not easy to start a company, especially when you know you've done this yourself, because the expectations are just, it's a very difficult match to meet your own expectations and the expectation of the clients. But one quick advice I would give most investors is always be on top of your numbers, especially the rehab. We've seen a lot of projects coming out of COVID where there was a big delta in the cost of material. So labor went up, lumber prices shot up. So it's always healthy to build in contingency, to keep a little bit of buffer, to make sure that if there's any curveball or any black swan event that happens, you can still absorb the costs. So that's been an interesting lesson, or rather, I would say an interesting thing that I've seen in my career coming out of investing in real estate in the last 12 to 24 months.
All right. And most of the borrowers that are refinancing with you, or their plan is to hold it long term after they've done the work, or like, if you did the refinance through your company, is there any prepayment penalty or exit fees associated with that? Because obviously with the conventional lender, you don't really have to deal with that, but you do have to deal with the closing costs of getting a new title or updated title, and legal and insurance, other, maybe prepaid taxes and escrows. So what does the closing cost look like on, maybe you mentioned there was a couple points going in, but going out on the permanent side, what does that look like?
Great question again. So we have zero exit fees. We do collect 3 months of reserves at closing, which basically services your principal, mortgage, interest, taxes, insurance. That's pretty much what we collect. We do have 2 points paid at closing. Again, that is at closing, so nothing upfront. As long as most of our investors, people who do refinance look to hold the properties longer term. I would say at least from a 5-year horizon, most investors we've seen want to hold the property for at least 3 to 5 years. So we've built in 2 options for prepayment penalty. One could be a 3-year declining prepay structure, or you could have a declining 5-year prepay structure.
Okay, so it really depends upon the deal. That's great. And how can my audience find you, learn more about you, maybe check out your platform? What's the best way?
The best way to send deals our way is just go to our website, which is www.instalend.com. And there are 2 sections out there. One is to request a pre-approval if you need one to put something under contract. And if you already have something under contract, there's a second section which just says apply for a loan. You could just submit details there. We do work with foreign investors, so we welcome investors within the US and outside the US as well to participate in the growth of the real estate asset class in the US.
Excellent. Great. And if you liked what you heard and or saw today, please give us a rating and review on iTunes. We'd really appreciate it. That would help our message get out to a greater audience. And we'll have a link to InstaLend and your social media as well on our social media platforms too. So definitely, my audience can connect with you and learn more about you. And you frequently speak at different multifamily and real estate conferences as well. So if anybody in the audience is listening, I'm sure you can check them out at an IMN event or a different real estate organization coming up. So it's great having you. Really appreciate your time and look forward to talking to you soon.
Thank you, Anthony. It's been a pleasure being on the show.